Jax's revenge domain. He stood there holding a $75 bill like it was some kind of tip for good service. "This covers what you're actually worth around here," Michael Winters said with that smug grin he saved for moments when he thought nobody important was watching. The conference room went dead quiet. 20-something faces stared at their phones. A few of the older guys looked uncomfortable, but nobody said a word. "My name is Gordon Hayes. I'm 47 years old, and until that moment I thought I understood how things worked at Midwest Regional Credit Union. I was wrong about a lot of things, but mostly I was wrong about thinking competence and loyalty meant anything to people who measure success in quarterly reports and family connections." Let me back up, because this story doesn't start with that $75 bill. It starts 18 months earlier when this place was held together with duct tape, prayer, and the kind of desperate optimism that keeps small institutions alive when they probably shouldn't be. 50,000 working families across Kansas and Missouri depended on Midwest Regional for everything that mattered. Paychecks from the school district, loans for used pickup trucks, mortgages on 3-bedroom houses with decent yards, small business financing for family restaurants and auto repair shops, all of it running on computer systems that belonged in a museum next to displays about the Clinton administration. I knew this personally because my wife banked here. Her teacher's salary hit our account every other Friday, assuming the direct deposit system decided to cooperate that week. Our mortgage payment came out automatically when the system remembered to process it. Our daughter's student loan originated here after we spent 3 days trying to complete an online application that crashed twice and lost her information both times. When Dennis Murphy from Member Services called about a consulting job, I was working contract IT for agricultural equipment manufacturers. Decent money, reliable work, but nothing that made me feel like I was solving problems that mattered to real people. The manufacturing work paid the bills, but it didn't give me the same satisfaction I'd gotten from my previous career. Before I got into information technology, I spent 15 years at Johnson Manufacturing here in Kansas. Started right out of high school. Learned industrial automation systems, worked my way up to senior controls engineer. Built systems that kept production lines running 24/7. Managed safety protocols that protected workers from machinery that could kill you if you made the wrong mistake at the wrong time. Johnson was a good company for a long time. Family-owned, treated employees like neighbors instead of expenses on a spreadsheet. But when the third generation took over and decided they could save 40% on labor costs by moving production to Mexico, that was the end of that. They kept 6 engineers to maintain what remained. I wasn't one of them. The layoffs hit everyone over 40 hardest. Younger engineers were cheaper, more willing to relocate, less likely to push back on decisions that prioritized short-term savings over long-term stability. I was 44, had a mortgage and a daughter heading to college, and discovered that 15 years of industrial experience translated into exactly 0 job opportunities in a town where the biggest employer had just cut 300 positions. That's how I ended up in information technology. Same logical thinking, different tools. Instead of programmable logic controllers and servo motors, I worked with databases and network infrastructure. Instead of production lines, I optimized business processes. The fundamentals were identical. Understand the system. Identify the weak points, engineer solutions that work reliably under stress. The IT consulting work was fine, but it lacked the personal connection I'd had with manufacturing. When you're designing control systems for factory equipment, you know the people who depend on your work. You see them every day, eat lunch with them, understand what happens when something goes wrong. With IT consulting, you fixed problems for companies where you never met the end users and rarely understood the real-world impact of system failures. So when Dennis called about Midwest Regional Credit Union, I was interested enough to drive over and take a look. The interview was in Michael Winters' office, a back room that smelled like burnt coffee and copied toner, with industrial carpet that had seen better decades. Michael sat across from me with a folder full of incident reports thick enough to use as a doorstop. System failures, member complaints, regulatory violations, compliance warnings, problems stacking up like unpaid bills on a kitchen counter. "We need someone who understands both sides," he said, flipping through pages that documented months of technical disasters. Banking regulations and technology infrastructure. Someone who knows what real work looks like, Not just theory from some college textbook. That last part got my attention. Michael had done his homework, knew about my manufacturing background, understood that I'd worked with systems where downtime meant real people lost real money. The board's getting nervous, he continued, pushing the folder across the desk so I could see the scope of the problems. We've got federal regulators asking questions about our system stability, members threatening to move their accounts to the big banks in Kansas City. If we can't fix this mess in the next 6 months, we might be looking at a forced merger with some corporate outfit that'll close half our branches and lay off most of our staff. I spent the rest of that afternoon walking through their server room with Paul Rodriguez, the senior developer who'd been keeping things running through pure determination and energy drinks. The infrastructure was exactly what I'd expected. Ancient servers humming in racks that hadn't been updated since Y2K preparations, network cables running along the ceiling like an afterthought, and core banking software that was basically a collection of patches built on top of other patches. How long has it been like this? I asked, looking at monitoring systems that showed more red alerts than green status indicators. Paul laughed, but it wasn't a happy sound. About 10 years, maybe longer. Every time something breaks, we fix it just enough to keep running. Nobody wants to approve the budget for a real overhaul, so we keep adding bandages to bandages. It's like trying to fix a cracked foundation by hanging new wallpaper. I took the job that same week, not just because the money was fair, though it was, and not because I needed the work, though steady income never hurts when you've got a college-bound daughter. I took it because 50,000 people were depending on systems that could fail catastrophically at any moment, and nobody seemed to understand just how close to disaster they really were. My first month was pure crisis management, system crashes at 2 a.m. that required 4 hours of manual database reconstruction, network outages that left branches unable to process transactions for entire afternoons, security vulnerabilities that kept me awake thinking about what would happen if someone with criminal intentions discovered them before I could patch them. But the worst part wasn't the technical problems. The worst part was watching how these failures affected real people. Mrs. Patterson from the school district trying to deposit her paycheck on Friday afternoon and discovering the system was down for routine maintenance that nobody had scheduled. Tom Rodriguez applying for a car loan to replace his broken-down pickup truck, having to come back 3 times because the application system kept losing his information. These weren't abstract technical challenges. These were neighbors, community members, people who chose this credit union over the big corporate banks because they wanted to deal with an institution that understood their lives and priorities. Every system failure was a betrayal of that trust. I didn't approach the problems like a typical IT consultant who comes in, fixes the immediate crisis, and moves on to the next client. I approached them like an engineer who understood that reliability isn't a luxury feature, it's the foundation that everything else depends on. Starting with the core banking system, I began mapping every integration point, every data flow, every potential failure mode. The network infrastructure that connected 12 branch locations, the backup systems that were supposed to protect against data loss but hadn't been tested in 3 years, the compliance reporting tools that generated regulatory filings through a process that involved printing reports, manually correcting them with red ink, and retyping the corrections into spreadsheets. Paul Rodriguez became my closest collaborator during those first few months. He'd been fighting these battles alone for years, maintaining systems that should have been replaced before he started working there. What impressed me about Paul wasn't just his technical knowledge, it was his understanding of how every piece of the operation connected to the members' lives. See this error log, he showed me one evening, pointing to a screen full of failed transaction attempts. Every one of these represents someone who couldn't access their account when they needed it. Maybe they were trying to check their balance before buying groceries. Maybe they needed to transfer money for their kid's school lunch account. We're not just fixing code errors, we're fixing people's daily frustrations. I spent the next 6 months rebuilding everything from the ground up, not patching or upgrading, completely redesigning the architecture to eliminate single points of failure and automate the manual processes that consumed so much staff time and created so many opportunities for human error. The member account management system got rebuilt with real-time redundancy and automatic failover. Loan processing moved from a 3-day manual approval workflow to 30-minute automated decisions with proper risk assessment. Branch connectivity became resilient enough that a backhoe cutting the fiber optic cable to one location wouldn't affect the other 11. Most importantly, I built comprehensive monitoring and alerting systems so problems could be detected and resolved before members experienced service interruptions. No more discovering outages when members called to complain. No more emergency weekend repairs to fix problems that could have been prevented with proper system health monitoring. The transformation didn't happen overnight, but the results became visible within a few months. Members stopped experiencing the random service disruptions that had been a regular part of their banking experience. Branch employees could focus on helping people instead of apologizing for system problems and promising that technical issues would be resolved soon. The credit union's operational costs dropped significantly as manual workarounds were eliminated and automated processes reduced the staff time required for routine transactions. Error rates in regulatory reporting fell to nearly zero. Member satisfaction scores improved across every category they tracked. By month 12, the transformation was complete enough that Michael Winters started getting recognition from the State Credit Union Association for innovative operational excellence. The federal compliance examination that everyone had been dreading came back with commendation for system stability and risk management. That's when the phone calls started coming. Other credit unions wanting to understand how Midwest Regional had achieved such dramatic improvements. Technology vendors trying to figure out what systems we were using so they could sell similar solutions to their clients. Members who had been considering switching to larger banks decided to stay, and some even moved additional accounts over from other institutions. Michael began including me in board presentations and strategic planning meetings, not just as a technical consultant, but as someone whose opinion mattered on operational decisions that affected the credit union's competitive position and long-term viability. "You saved this place," he told me after a particularly successful board meeting where we'd presented 18 months of operational improvements. "The regulators are happy, the members are loyal, and we're growing instead of shrinking. I don't know how we can ever properly thank you." That conversation happened on a Thursday afternoon in late autumn. By the following Tuesday, I'd discover exactly how Michael Winters defined proper thanks, and it wasn't what anyone would call generous. The first sign of change was Brandon Winters showing up at the monthly staff meeting. Michael's son, 32 years old, with an MBA from Northwestern and exactly zero experience in community banking. He'd been working in commercial real estate development in Chicago, which apparently qualified him to have strong opinions about how a small-town credit union should operate. Brandon walked into that meeting wearing a suit that cost more than Paul Rodriguez earned in a month, and immediately began talking about digital transformation initiatives and customer experience optimization like he'd discovered these concepts during his drive down from Chicago. "We need to think bigger," he announced to a room full of people who'd spent the past year thinking about nothing except keeping this institution viable. "This is about vision and strategic positioning, not just maintaining the status quo." I looked at the system monitoring dashboard mounted on the conference room wall. Uptime 99.97% over the past 90 days. Transaction processing, operating within normal parameters. No alerts, no warnings, no red indicators anywhere on the status display. Which specific areas are you looking to improve? I asked, genuinely curious about what problems he'd identified that the rest of us had missed. Brandon paused for just long enough to make it clear he didn't actually understand what any of the systems did or how they connected to each other. "The overall architecture. We can't stay in maintenance mode forever. The architecture is what's processing 15,000 payroll deposits every other Friday without a single failed transaction," I replied. "And 2,800 auto loan payments that posted this week with zero manual intervention required. If you want to make changes, we need to understand what problem we're trying to solve." His eyes flicked toward his father, looking for backup that wasn't coming. The room had gone quiet in that uncomfortable way that happens when someone realizes they're in over their head, but can't gracefully exit the conversation. "Let's not get bogged down in technical details," Brandon said finally. "We're talking about strategic direction here." After that meeting, small changes started happening around the credit union. I discovered planning sessions had occurred without anyone thinking to invite the person responsible for implementing whatever got decided. My regular system review meetings got postponed and never rescheduled. Decisions that affected core infrastructure began arriving in my email as FYI notifications after they'd already been finalized. Brandon started presenting my work to external audiences. He'd stand in front of slides I'd created, pointing to metrics I'd developed, and talk about operational excellence initiatives without mentioning that every number on those presentations represented something I'd designed, built, tested, and deployed. During one quarterly business review with the State Credit Union Association, I watched him present a case study about transformational leadership in community banking using a PowerPoint deck that was basically a summary of my 18-month project plan with different fonts and his name in the corner where mine used to be. 3 weeks later, Dennis Murphy stopped by my desk with the kind of expression that meant he was delivering news he didn't want to share. "They took you off the executive briefing distribution," he said quietly. "Brandon's going to be handling all technology reporting from now on." Did Michael approve that change? Dennis shrugged uncomfortably. The email came from his office, but Brandon's signature was on it. That evening, I went home and did something I probably should have done months earlier. I pulled out the contracts I'd signed when I started this project and read through them carefully, paying attention to sections that had seemed like standard legal boilerplate at the time. See, I hadn't structured this engagement as a traditional employment relationship. I'd learned from the Johnson manufacturing experience that being someone's employee means they own your work product and can dispose of your services whenever it's convenient for them. Instead, I'd set up Hayes Technical Solutions as an independent consulting firm and licensed the software platform I'd built to Midwest Regional Credit Union. The licensing agreement included standard protections for both parties, but there was one clause that I'd insisted on based on previous experience with clients who wanted to keep the benefits of my work while eliminating the ongoing relationship. Section 7.2 specified what happened if the credit union attempted to replace the designated technical lead, me, without proper transition planning and mutual agreement. In that case, the software licensing could be suspended pending resolution of the unauthorized change in operational oversight. I'd included that protection because I'd been burned before, not by malicious intent, but by organizations that didn't understand the difference between owning software and maintaining software. They'd assume that once the initial implementation was complete, any competent IT person could handle ongoing operations and development. But the platform I'd built for Midwest Regional wasn't just a collection of programs that could be maintained by anyone with basic technical skills. It was an integrated architecture that required deep understanding of both the business requirements and the technical implementation details. The compliance monitoring, risk assessment algorithms, and automated reconciliation processes weren't documented in any manual that could be handed to a replacement consultant. 2 weeks later, Michael Winters called an all-hands meeting for the entire credit union staff. The main conference room was packed with employees from every branch, plus board members participating by speakerphone, a banner hung behind the podium. Midwest Regional Credit Union, serving our community for 45 years. Michael started with the usual quarterly updates about membership growth and loan portfolio performance. All positive numbers, most of them directly attributable to the operational improvements that had made the credit union more competitive and more reliable than the alternatives. Then he transitioned to what he called exciting developments in our leadership structure. As we look toward the future, he said, "This organization needs leadership that combines our traditional community values with innovative thinking about the evolving financial services landscape." I'm pleased to announce that Brandon Winters will be taking over all technology and operations oversight, effective immediately. The room erupted in polite applause. Brandon stepped up to the microphone, looking like he'd been practicing this moment in front of a mirror. "I want to recognize Gordon Hayes for his excellent technical work over the past 18 months, he said, glancing briefly in my direction. "But going forward, this organization needs strategic vision, not just technical maintenance." More applause, though I noticed some of the longer-tenured staff members looked uncomfortable. Paul Rodriguez was studying his hands like they contained important information. Dennis Murphy caught my eye from across the room and shook his head almost imperceptibly. After the meeting ended and people began drifting toward the coffee and sheet cake setup, Michael Winters approached me near the back of the room. He had the relaxed demeanor of someone who just completed an unpleasant but necessary task. "Gordon," he said, "I hope you understand this isn't personal. You did outstanding work getting us stabilized. But Brandon brings something different to the table: vision, leadership skills, the kind of strategic thinking that takes an organization to the next level. I nodded slowly, processing what I was hearing and what happens to the technical work. The system maintenance, ongoing development, compliance monitoring, we'll figure it out as we go, he said with a dismissive wave. Brandon's got some ideas about outsourcing arrangements that might make more sense financially, probably more cost-effective than maintaining an expensive consulting relationship long-term. That's when he reached into his jacket pocket and pulled out his wallet. He thumbed through several bills and selected one, sliding it across the table between us without ceremony. A $75 bill, crisp, uncreased, worth less than what his son probably spent on lunch that afternoon. "This covers what you're actually worth around here," he said, tapping the bill with one finger. "You should take it and be grateful we're not asking for reimbursement on some of those consulting fees that probably exceeded the actual value delivered." I stared at that $75 bill for a long moment, processing what had just happened. Less than what I spent filling up my truck. Less than what Brandon probably paid for the tie he was wearing. A deliberate insult designed to make me understand exactly how little Michael Winters thought of the work that had saved his institution. I picked up the bill, folded it once, and slipped it into my shirt pocket. "Thank you," I said quietly. Michael looked almost disappointed, like he'd expected me to argue or make a scene that would justify his decision to the staff members who were still within earshot. That's it. I walked out of that building, got in my truck, and drove home through the Kansas countryside I'd grown up in. Past family farms that had banked with Midwest Regional for generations, past small businesses that depended on the credit union for operating capital, past houses where neighbors lived who'd chosen this institution because it understood their values and priorities. My wife was in the kitchen when I got home, grading papers from her third-grade class. I told her what had happened while she marked spelling tests and math assignments. "What are you going to do?" she asked, looking up from a worksheet covered in red ink corrections. "I'm going to honor the contract I signed," I said. That night, I opened my laptop and logged into the Hayes Technical Solutions Management Portal, the system that controlled licensing and access for Midwest Regional Credit Union's entire banking platform. My platform, my code, my architecture that had transformed their operation from disaster-prone to industry-leading. The status dashboard showed everything running normally. License, active, renewable in 30 days. Support contract, active through the following year. Operational oversight, Hayes Technical Solutions. Designated technical lead, Gordon Hayes. 3 configuration options were available to me as the licensing administrator. Maintain current status. Initiate transition to new provider with proper documentation and training, or suspend operations pending resolution of unauthorized oversight changes. According to Section 7.2 of our agreement, Midwest Regional Credit Union had materially altered my operational oversight without mutual consent, proper transition planning, or technical documentation transfer. That triggered specific protective measures designed to prevent system disruption during unauthorized management changes. At 11:47 p.m., I selected the third option. A confirmation dialog appeared. Credit union license will be suspended at 9 a.m. local time unless transition agreement is executed. System will operate in safe mode with read-only access to prevent data corruption. Recommend immediate notification of affected parties. I clicked confirm and closed the laptop. The next morning at 9:03, my phone started ringing. Michael Winters sounding breathless and panicked. "Gordon, we've got a serious problem here. The system's not responding normally. Payroll deposits are stuck in processing queues. Members can't complete transactions through online banking. Branch terminals are showing error messages. What did you do?" "The system's responding perfectly," I said, pouring coffee and settling into my kitchen chair. "It's operating in safe mode pending resolution of the unauthorized management transition you announced yesterday." "What the hell does that mean?" "It means your license to use the software has been suspended under Section 7.2 of our agreement. The platform is running and your data is completely safe, but it won't process new transactions or updates until we resolve the oversight issue. You can't just shut us down." I didn't shut anything down. The platform detected an unauthorized change in operational control and automatically engaged protective protocols. Historical data is intact. Compliance reporting continues. Members can check account balances. You just can't process deposits, withdrawals, loan payments, or any other new transactions. By 10:30, the credit union's lobby was full of members who couldn't deposit paychecks, transfer money between accounts, or access online banking services. The phone system was overwhelmed with calls from people trying to understand why their direct deposits weren't showing up, and why the ATM network was displaying temporarily unavailable messages. Brandon called me at 11:15, his voice tight with controlled rage. "This is sabotage. You're destroying the credit union because you're bitter about losing your consulting contract." "I didn't lose anything," I replied calmly. "You announced you were replacing me without following the procedures outlined in our legal agreement. That triggered automatic protective measures to prevent system disruption during unauthorized transitions. We'll rebuild everything without you. We'll hire a real IT firm that understands customer service. How's that working out so far?" The silence on the other end lasted long enough that I wondered if he'd hung up. By noon, my phone was ringing constantly with calls from credit union members. Word travels fast in small communities, and people had figured out that I was the technical architect behind the systems they depended on. "Gordon," said Mrs. Patterson from the school district, "if you're not running the computer systems anymore, we want to move our payroll processing somewhere else. The teachers can't afford to have their paychecks delayed because of management politics." Similar calls came from small business owners, retirees, young families with mortgages, all variations of the same message. "If Gordon Hayes isn't managing the technology, we don't trust this institution with our money." At 2:30 p.m., Michael Winters called back. His voice had lost the angry edge and taken on a more practical tone. "We need to meet and discuss this situation. I'm not your employee anymore," I said. "If you want to meet, we'll need to schedule a business consultation. My standard rate is $200 per hour with a 4-hour minimum. Fine, this afternoon. Conference room B at 4. When I walked into that conference room at exactly 400, Michael was there with Brandon, 2 board members I recognized, and a speakerphone connecting to others. They looked like people who'd spent 6 hours watching their world fall apart one phone call at a time. I placed the $75 bill in the center of the conference table. The same bill, still folded the same way. "You remember this?" I asked. Brandon leaned forward aggressively. "What do you want? Money? An apology?" "Some kind of public recognition. I want you to understand what you actually bought with this money," I said, tapping the bill with one finger. "You thought you were buying my silence, my acceptance of being discarded after I'd served my purpose, my willingness to disappear quietly while someone else took credit for work they'd never understand." Patricia Williams, the board member participating by phone, spoke for the first time. "Mr. Hayes, what will it take to resolve this situation and get our systems operational again? That depends entirely on what you're trying to accomplish," I said. "If you want the systems running normally, I can have everything operational within an hour of signing proper agreements. If you want to replace me with Brandon and proceed with outsourcing plans, you're welcome to try. You'll just be doing it without the platform I built, and your members will be banking somewhere else while you figure out alternatives." Michael rubbed his forehead like he was developing a headache. "What kind of agreements? The kind that acknowledges reality instead of pretending it doesn't exist." Hayes Technical Solutions retains full operational control over all core technology systems. Any changes to technical leadership require my written consent and proper transition planning, not just announcements at staff meetings. And we structure this as a long-term partnership with appropriate compensation, not a month-to-month arrangement that can be terminated whenever someone decides the IT budget looks too expensive. Brandon's jaw tightened visibly. "You want to run the credit union? I want to run the computer systems that keep this credit union functioning," I replied. "You can have every other responsibility you think you're qualified for. Marketing, member relations, community outreach, strategic planning, have at it. Just stay away from technology infrastructure unless you're prepared to learn how it actually works." Patricia Williams spoke again, in compensation terms. "Market rate for an exclusive technology partnership with an organization this size, plus equity participation, since we're talking about long-term strategic alignment, and a formal acknowledgement that the operational improvements over the past 18 months resulted from technical expertise, not management vision." The room went quiet. Finally, Michael sighed deeply. "How long would it take to restore normal operations? 30 minutes after I see signed agreements, they signed within 2 hours. New 5-year exclusive licensing and support contract with Hayes Technical Solutions. Full operational control over technology infrastructure remained with me. Brandon got reassigned to community development, which was a diplomatic way of saying he could organize the annual golf tournament and stay out of the server room. The systems were fully operational by 6:45 p.m. Members could access accounts normally. Payroll deposits processed without delays, and life returned to normal for 50,000 families who just wanted their financial institution to work reliably. 3 months later, Brandon quietly left for what he called a strategic opportunity in Kansas City. 6 months after that, membership had grown by 8,000 new accounts, mostly from people who'd heard that Midwest Regional had the most reliable banking technology in the region. I still have that $75 bill framed above my desk, not as a trophy, but as a reminder that respect isn't given, it's earned through competence and maintained through proper boundaries. That technical expertise isn't just support work, it's the foundation everything else depends on. And that when someone tries to put a price tag on your value, you don't have to accept their arithmetic. The credit union's thriving, by the way. We've expanded into 3 new counties, launched online services that compete successfully against the big banks, and maintained 99.98% system uptime for the past year. Turns out when your technology actually works, word gets around quickly. My wife still gets her teacher's salary deposited reliably every other Friday. My daughter got an excellent rate on her post-graduation car loan, and when my neighbors need banking services, they know they're dealing with systems built by someone who lives in the same community and understands that technology isn't just code, it's trust made digital. That's worth considerably more than $75.